The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX today. And you can see here that we have made one ABCD pattern, and now you see there's a possibility of another one. That's what happens with pattern recognition, boys and girls. You always get lots of opportunities. So you have to select which one you're going to work off of. But that's what we're looking at right now in the German DAX. If we take a look, here at the, hold on one second here. If we take a look at the FTSE, you'll see that it is much, much clearer. It's a beautiful Gartley pattern. It's absolutely classic at the 61% retracement. It is just spot on right where it's supposed to be, and it's had a really good move, almost 100 points, which is in the FTSE is quite a bit. So that has done what it's supposed to do. Whether it'll continue or not remains to be seen, but that's the factor that we always have to work on. Please let me know that I'm coming through okay. There's been a few technical difficulties, and that's part of the problem. Some of you folks have asked to see what the house looks like here in Tucson, so I thought I'd bring it up and let you take a look at it. Many of you have been here, and some of you, of course, have not, so I wanted to get up and let you see what it looks like. There it is. It's a little small place. Now you can see it's my house because you can see in the front yard, you see those two big X's. Those are chart formations where X and Y are squared. That's price and time. Folks, this was actually a chart from a hedge fund manager back in 2009. It's overlooking the Pacific Ocean in San Diego. It's 22,000 square feet. He paid $50 million for it. He sold it for $22 million. But there was a big joke about this many years ago. But anyway, that's neither here nor there. We'll move on to a couple other things. Just give me 1 second, and we will be moving on to the show here a little bit. Okay. Yeah, that's probably it. No, 222 Ocean Avenue, I believe, was the address. But we had some fun with that once in New York, but it was that's been a long time ago. Folks, there's a real probability here that these bonds are getting ready to head south. Let me show you the relationship here between the I shouldn't have done that. I knew it. I knew you guys. Thank you, Mark P. Yeah, I'm not going to say anything. I'm going to keep my mouth shut. Okay, here's the German Bund. You notice that we had this beautiful butterfly pattern up here. Well, we've been down now 2 days. I mean, this is on U.S. dollar terms, it's a lot of money with the German Bund because it was trading at a much higher price than others. But the key to that is, if you remember, we looked at this long-term weekly chart here in the Bund, and it's starting to work, the exact way we thought it was, and hit the exact price. So pay attention to that. That's affecting our Treasury bonds also. We're basically about unchanged today. There's some support there at that 144.30 in the March bonds. But if that fails, you're going to be looking at much lower prices. So keeping a close eye on that. That's an international phenomenon, I guess. I don't know what how else to explain it, but basically, we'll basically look at that. So we'll see how that actually works. Folks, let me talk to you about one market that is in real serious trouble here. Let me get it up here and take a look at it. I'm going to bring it up to you in just a second here, and then just talk to you a little bit about a little bit of history. You'll notice this is natural gas. Folks, look at this period around the 24th to the 25th of January when that monster storm hit, and it's going to be 30 or 40 below zero wind chill in some cities in the northern part. Now, natural gas is already broken down to I believe the last price I saw was around 281, I believe. Let me double check that, but it was really getting hammered. Well, it's 282 right now, but this is a perfect example of a market that is absolutely taking fundamentals and throwing them out in the face. I mean, it is just not doing what it's supposed to be doing. That's a tremendously bearish thing. When you've got something that is really, really bullish and the market cannot react to it, it only has one way to go, and that's to the downside. Let's look at this natural gas on a longer time frame here. You'll see here. You'll be able to see it right here that we're already breaking down. We're at 281 right now. You notice that we had the big Gartley pattern up there, the 61% retracement up at the 490 level. And that's when the market, started to have its move down. But now we're breaking down. The next support in this, and it should be good support, comes in at around 260. So with this kind of news, the fact that it's so cold and you're not getting anything helping you, you better be looking at a really short-term pattern to try to control your risk on this one, because it can really be, really be nasty. So pay close attention to that. It's going to be pretty good. It's going to be chilly here in Tucson today too. We're only going to get to be 78. So it's going to be, a little chilly here. So make sure you wear a warm sweater if you're out in this area. Okay, let's take a look at a couple other things that look really interesting right now. We've got, Tom was talking about crude oil, and I think we should bring that up. We haven't talked about it in quite some time. Here's the last 2 weeks of crude oil. Let me get this up here so we can all take a look at it together. It's a hourly chart. You'll notice that the high was made up there at the 1.27 expansion. That was around 54.15. Remember that the 382 retracement on this crude oil comes in at 55.30. So it was within $1 of the exact 38% retracement of the whole move down. Then you'll see you had a beautiful Gartley pattern forming on the 25th. We went down into the 22nd, up into the 23rd, up into the 24th. And we hit a high of 54, well, that was 53.90 in the crude oil, and that was a 78% retracement. And yesterday, we went right down to the 78% retracement of that move, where you had a perfect ABCD pattern from that 54.30 down to 51.60, up to 53.90, and down to the exact price of 51.27. If you do the ABCD formula on that, you'll see that that was spot on. That's B plus C minus A, and that equals, your D point. So now we've had a pretty good rally. Now, if it's bearish, you should make a retracement that will take you back up to the 61% retracement off of that point B up there. That would take you up to about 53.10. You start getting above 53.55, folks, you're looking at a potential ABCD that's going to take you up to that 382 level, and that's the one that you're going to be really watching, because if we can get above that, and if we can get above that, then it's got a chance to really have a pretty good move here. Let's take a quick look at that. You can see that 382 setting up there at 55.65. So that's $2 a barrel from where we are right now. But these markets move very, very quickly, especially when we have crazy news items like we have every 10 minutes coming out of either New York, Washington, Bangladesh, Kathmandu, or whatever. I mean, there's always something coming out here. Okay, we're going to take a little break now. So live every day in an attitude of gratitude, and may God bless, and I will be right back with you, folks.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this next chart we're going to be looking at is for Ruby. And Ruby, as you can see, we hit that 61% retracement on Friday in the sugar right down there at that 1240 level. We've since rallied about $600. It better hold that support, because if it doesn't, it's going to go down quite a bit. It's up a little today, so it did hit that exact number. This is one of the ones that we were focusing on in the newsletter over the weekend, because it is a very, very nice chart, because you had that beautiful retracement down there, and then you had a nice rally up to the 61% retracement, and then you had another rally down to the 61% retracement. Folks, we've had a special request here, so I'm going to we're going to get this up here, and we are going to post this chart for the little princess herself in the den. That's Miss Dudette. I'm not going to give her real name, Maria. Oops. Sorry about that. Anyway, let's take a look at this beautiful chart that she's got here. This is a really nice one, folks. I was going to bring this up, but this is actually better than the one I was looking at. Here it comes. Dudette, there you go. That's her handle. Anyway, you'll see that we've got a ABCD structure coming up here at around the 2650 level. That's a really nice problem. And you also see we've got another one at the 2652 level. That's the 61% retracement. Right now we're trading at 2645. So both of those levels are what you want to look at. Now, here's the problem that we have as trading, and that is you've got to decide which level do you want to try to hit, and that is the 2650, or do you want to hit the 2657? So you have to decide to do that. Now, easy way to do it is to do it at the 2650 and put your stop above that retracement up there at around 2659. So if you're not willing to risk 9 handles in this, the best way to do it is to put your order in at the 2650, use a 4 or 5 point stop, and then if you get stopped out of that, go up to the next one, and you'll be looking at 2657. This is a beautiful chart. The colors are really nice, but I don't understand what's going on at the bottom of the chart there. What are those wavy things? Is that ocean? Those must be ocean currents from the UK and the US, or maybe it's the Pacific Ocean and the Atlantic Ocean ocean currents, those red and blue lines. I've never seen those before. Very strange. But anyway, they must be important. Otherwise, she probably wouldn't have put those on the chart. So we'll see. I understand. I understand. I have to keep the game alive here, otherwise we'll look around. Folks, you know, when I brought that chart up about the natural gas, I did it for a reason, because when you see something happening that is totally opposite of what the charts are telling you, pay attention to that, folks, because there are people out there that know a heck of a lot more than we do. There's absolutely no question about it. Now, in my many years of trading, which I started, you know, way back in 1959, I've kept a few memorabilia. That's a big word for an Italian to say. But one of the things that I hold very dear, I have in a scrapbook that I not been able to find, but I know it's here because I would never throw it away. In January 1976, they were having a big coin show in Las Vegas, Nevada. And I was asked by several of the coin dealers to act as security, because I carried a concealed CRW, concealed weapon permit, and you know they had millions of dollars worth of coins, gold, silver, a lot of stuff, and so it was a 4-day event. It was during Super Bowl 10, and I believe it was the Steelers against the Cowboys. Steelers won. Anyway, we went over there for that, and I was going to be there for 4 days. So I went to the bank and I took out $1,000. I had a nice little money clip, and it was all $20 bills. And so I had this $1,000 to spend for the 4 days, which was more than I usually limited because of the fact that I usually only played poker. Well, the Friday night before the Super Bowl, some of these coin dealers, some of them are pretty famous, but anyway, we got around a crap table and I had a couple glasses of wine, maybe more than two. And anyway, I lost about half of my money on that crap table that night. And I kept that money clip for one reason. When I came back from Las Vegas, I think I had $600 left, so the whole thing cost me about $400. And I kept that because that $1,000, had I put it in, and this was 1976, and I had been trading. I was no longer working with Lilly. I quit Lilly in April of '75, and so I'd been trading on my own for quite a while. And if I'd have put that into that bean oil position that I wanted, it would have made 10 times that much. So I kept that and said, this is, when you're doing this, it's got to be funny money. So about the only thing I do, I play a slot machine once in a while for $20, and then I do play poker, but that's pretty much it. So remember that when you see some of these things happening, that you're the one that has to take responsibility for it. Someone asked a question about how I made the transition between becoming a trader and working for Eli Lilly. I been with Lilly for 10 years. I really wanted to get to be a professional trader. I had sat down with the family, and we decided that if I gave the family 1 year's income, that if I wasn't making as much as I was with Eli Lilly, that after that 1 year, I would go back into the pharmacy business and just do trading on the part-time. But if I continued to do okay, that I would be all right. So that's exactly how it happened. And shortly after that, it was about 6 or 7 months later, then the B&O position worked out really good. Drexel Burnham hired me, and that was it. So that's pretty much what's been happening, during that time. So we'll see what's going on. Okay, all righty. Let's move on to a couple other charts that we need to cover here. We do have, let me remind you that we have Tim Bost will be our guest here on Friday, February 1st. And I think you'll have a lot of fun listening to what Tim has to say. Now, remember, folks, that when we talked about yesterday, I wanted to bring this up. This is important. It shows you some of the problems that you have when you're trading foreign markets. This is the Hang Seng Index that we're looking at. If you'll notice that ABCD structure comes in at 27,785, okay? Now, if you did the actual calculation of the ABCD swing itself, that we did that actual calculation here in the den where we took B plus C minus A. I think I still have it here. Let's get it up. Yeah, here it is. Here it is. We'll put it right up here. We'll get the thing here. We put B plus C minus A, and you'll see that number up there in blue measured to 27,760. Now, the high yesterday in the Hang Seng was 27,761. 1 point higher. That's equivalent to about $25. The problem was what happened last night. Just by chance, I have, quite a few students in Hong Kong, and they came back to me and said, Larry, we're showing two different highs. One high was only 27,747, and the other high was 27,790. So they're two distinct highs from two different data sources coming out of Hong Kong. So you have to figure out which one of those data sources is going to be real. That's what I'm working on this morning, is to find out what's happening. I do not trade the Hang Seng Index, but what I want to know is what that data source is, so that I don't want to use the one that's wrong, because that's a bad no-no, that's for sure. Okay, we've got to take a break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and someone's asked a question if they had to buy, the natural gas today, how would you go about looking, to buy natural gas? Well, first of all, I guess you have to say your prayers for one thing, but let's take a quick look here. If we were to look at natural gas, we'll do this together so we can see it. This is a chart that you'll be able to see here. This is a hourly chart, and you'll notice that if you took the low that we made back on the 23rd versus the high on the 25th, and you expanded it down to a 1.618 expansion, you'll notice that that comes in at 2.79. And so far, our low has been 2.81. Now that's just a 1.618 ratio, so that's nothing, really too exciting, to have in your favor. But if we went just a little bit farther and just take a look, go back for just a little bit to see if that system would have worked in the past. If you'll look from the 18th of January, we had a big move up, and then we had the expansion down. You see that it stopped right at the 1.618 level at 294 and rallied up to 309. That's a $2,500 move in the natural gas. Now let's do one other thing just for fun to see if there's anything else that would tell us that there's a potential major bottom here in natural gas. And if you put it all together, that's what we're doing. You'll notice what we're looking at here is a 1, 2, 3 drive to a bottom. You'll notice in the 22nd, 23rd, you made a 1.618 expansion. You can see that in light blue. You can see the one from the 28th or to today, the 29th, in light blue, exactly 1.618. Folks, my guess is we're getting ready to see a rally in natural gas. It should hold that 279. Now, if it doesn't hold 279, then that's pretty much, pretty much what's going on. Hey, who's knocking Bobby Knight? That's not very fair. Bobby Knight coached at Indiana. As a matter of fact, I had a strong connection there. Bobby Knight's assistant coach was none other than Ron, oh my goodness, Ron Felling from Riley, Indiana, where my sister lives, right outside of Terre Haute. Ron was a very, very dear friend of mine. I happened to be in his wedding party many, many years ago. He coached at Lawrenceville High School, where he was the greatest high school basketball coach in Illinois, and he had a player named Marty Simmons. He was supposed to be the next Larry Bird, and he made a deal with Bobby Knight to get Marty Simmons to go to Indiana, and he did, and Felling stayed with him for I think 25 years, and Ron lives out in California right now, and Marty Simmons is the coach of the Evansville Purple Aces in Evansville, Indiana. It's a nice little school in the Missouri Valley Conference. Okay, enough of the basketball stuff. Let's move on to the markets here. Let's take a look to see how Dudette's chart is doing this morning. She's looking at those numbers. Let's get it up here so we can take a quick look at it. And we got up to the first one. Oh, we missed it by about 2 points. Wait for the number, folks. Maria's looking at around that 26.49, 26.57 area. You know what your risk is if you're doing that. So pay, pretty close attention to it, because we'll be pretty much spot on if we're looking at those correctly. So we'll just watch that as we go through. Folks, it's okay if you trade natural gas, but for heaven's sakes, make sure that you use a stop, because this is one wild thing. This is the E-mini on steroids. This is the pork bellies of the energy complex. So don't trade this thing without a stop. I mean, some people can trade, using a desktop, but frankly, it's a little difficult for most, especially for this old cowboy. So pay close attention to these, because when they run, they can really run. You can see back, you just look at that chart we did and go back to the 13th of January. We had that it was a $2,000 gap up, and yet the market closed lower 4 days lower. So it's not for the faint of heart. So pay close attention to that as we look at some of these things. And I'm going to double check a couple of quick things here. One of the things that we're keeping a very close eye on, folks, is the grain markets, because there's a lot of news, coming about China, and especially this Chinese spy that was in Canada, and I don't know if she's a Chinese spy. She's the daughter of the owner, and I know they're playing games, but that's neither here nor there. But the problem with this company is evidently they put software out that is able to track just about everything that you do with a cell phone. I saw some pictures that Sarah showed me of things that go on over there, and my goodness, if you have an app, that app tracks exactly where you are, records your phone conversations, can actually take your credit card numbers, your security codes. It's real serious stuff. So we have to keep in mind that that's a big deal. But by the time we hear about it, it's history. So that's neither here nor there. Okay, let's move on. We have a question about, someone have a question about the wheat. Let's just get up the futures area here. We're extremely bullish the wheat. And you'll notice here that we were waiting for the wheat to complete that ABCD pattern. Give me 1 second and we'll get it up here. There we go. There. Yes, oil is moving. It had that beautiful bottom down there, that beautiful butterfly pattern. Now, remember, we're coming up to this area in the oil that's very important. That's going to be the area right around that 53.80, I believe. Let's just, you can see the wheat here. The last correction that we had went from 25, dropped 17 cents. That's the harmonic number in wheat. So 17 cents off of 29. If you can get that wheat around 512 in the March wheat, that's going to be a 135 pattern. Pay close attention to that one. That's a really nice one to look at. So watch that very, very closely. Let's take a quick look here at this oil for everybody, and we'll see, because we talked about it. Let's just put it up here so we can all see it together. And so we can all see it together, and that's what we're going to do here in just a second as soon as I get these retracements in. And at 52.95, 25 cents from where we are is going to be a very nice pattern. Let's just get this up here, boys and girls, so we can all see it. And here it comes. Now you can see from yesterday's low at the 51.35 level, we've now rallied $1.50 a barrel. We're trading at 52.70. The 61% retracement comes in at 52.95. Let's do something, since we've got the time here, let's do something just a little bit different. Let's just blow this up so that we can see the larger pattern that is staring us right in the face. And we'll post that one, and you'll be able to see it even clearer. This is what Maria was doing for us with the E-mini, and we will, I don't know who Maria trained under, but she must have got some information similar to what I'm looking at. Anyway, you'll notice here at that 52.94, that's going to be the 61% retracement. That's also the ABCD pattern from yesterday. But you'll know the key level up here, folks, is that 53.35. At 53.35, you have that 135 pattern that Roy Longstreet and his son Bill like so much. That's a beautiful one. That's just that's really spot on. And what we need to do is, because it's an hourly one, as soon as this break comes up, I'm going to bring this up and let everybody take a look at it, because this looks like a really classic getting ready to complete, and we want to watch this unfold if we can, because it will happen. Looks like tomorrow possibly, but maybe today. Let's take a quick look here. 877-927-6648. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, continuing on with crude oil here, I've blown this up over the last 10 trading days, so you can see the 135 pattern that we see potentially occurring. Now, we have to see how this Gartley is going to work at 52.94. We're trading at around 52.70 right now, so above that, we're looking at that 78% level, up about another $0.50 a barrel higher, so that's what we're watching. Anything above that 53.55 level means that we're most probably going to go up and make that 382 in the crude oil that we posted earlier this morning. I'll bring it up again so you'll be able to see it, and it would be really close to that 55.75 level that we would be watching. So those are the ones that we're paying very close attention to as we look at this morning. Let's take a quick look to see how the market's open and how it's trading this morning. Let's see, we've been as high as where are we at? 50. We're 26.43. We're looking at two levels, 26.49. 26.57 in the S&P. That still looks bearish to us, folks, because of the action that we had, going down yesterday. We were looking for the market to go lower because of the strong resistance that we had up there at that 26.75. We pointed that out in the newsletter, and one of the things that I decided to do this week because of these critical days that we're looking at right now is the fact that we are watching what some of these markets are doing, particularly the euro, particularly the Canadian dollar, and the treasury bonds, also the gold. Gold's had a nice move, folks. We've broken out above all resistance at that 1303 level, and we got up to 1310 and a half this morning. We dropped $5 from that level. Yesterday's correction was hardly anything. It was $8, so we might only get an $8 correction in gold if it's really super bullish. Let's just bring this up so we can take a quick look at it. Right now it's trading at the 382 level of yesterday's low, and if it's real bullish, it's not going to get much below that, would be my guess. Let's bring this up here, because if we get below that 1304, then we're probably going to have a pretty good correction in the gold. But right now, that doesn't look like that's the case. Let me see. Oh, where do you see short treasury bonds? Do you mean where to short them? I think you sell them anywhere around 45.16 is a pretty good deal. I mean, that's my guess. I think it's about 46 and change. I'm probably wrong, but that's a bearish chart, both for the UK. The German bond and the U.S. Treasury bond. What they're doing now is, basically just backing and filling, really doing nothing. We're trading at 45.11. We've been in a really tight trading range now for 4 days here. So there's an ABCD structure, Bob, in the Treasury bonds. Looking at them on a little bit shorter time frame, that would take us up here to about 40. Let's just put this up here since we have time to do it. And because we hit that 61% retracement pretty good, and we would be watching this pattern unfold, and that would take us up to 45.18. That's what I thought. So let's get this up here so the folks can take a look at it. And you'll see there's where we are. You're seeing 145.18. We're trading 145.11 right now. That would take out the highs of yesterday. And that would be, you know, usually where it would turn down from. That's an ABCD. The high we had at 145.30 was certainly an important number. So that's what it looks like for me, from my perspective. So looks like a good deal, but, you know, it's just like a broken drum. Can only go there once. There's a restaurant there in Santa Monica, California that says it's the broken drum, and their handle is the broken drum. You can't beat it. Anyway, let's move on here to someone else asked a question about one of the futures that we're watching really closely, and that is the the coffee market. Let's get this up here because there's a really strong probability of having a really big move in coffee, folks. Let's bring this up here to show you. We're trading at around 103 right now. If we can get coffee down to about 102 one more time, that would be a really nice 135 pattern. And there's very good support there. So if we get that, it would look pretty good. Now, because of these things that are going on with Canada and the spy stuff, it's, you know, causing a little bit of problems with soybeans and corn and wheat exports and stuff like that. But the people that take advantage of those exports are Brazil for soybeans, and for wheat, it's Russia. So just because one country is getting slapped doesn't mean the other country doesn't pick up the slack, because they certainly do. The problem that we're facing this year, folks, is that we're looking at an outlier year, because we have never gone 5 years. This will be the 5th year without a major crop problem of some kind. You know, either a drought or too much water or freeze. There's always something, and this is an outlier year. So are we going to say this will be the 5th year, maybe the 6th year? I don't know, but I'm preparing, you know, for something really big to happen to these grains. We're getting ready for the planting intentions reports. Will be coming out in the next 5 or 6 weeks, and then the planting starts, and then we're going to see how these ocean currents for El Nino are going to unfold. But those are the main ones that we're going to be watching as we look at some of these unfold here, you know, through the growing season. But I really think there's something big getting ready to happen in that one, and we'll watch that as it certainly unfolds. As far as the euro and the U.S. dollar, the euro did get above the 114 level. Let's see if we can bring this up here to let the folks take a look at it. Here we are. You'll notice that we got just a little bit higher. All we did was we got up to the 61% retracement of this, and we'll see. By the way, I believe they have earnings for Apple coming out, and of course, Apple's no longer the golden darling. It's a wicked stepsister now, so they'll probably have some big surprises for Apple, you know, coming out tomorrow, but whatever that means anything. Now, the high that we made here in the euro last night, I haven't posted this, I haven't updated it yet, but it was right at the 50% retracement of the high that we made back in that area. Now, one of the reasons why I wanted to see what happens today and tomorrow is because that big action that we had in the euro. You know, folks, we're trading just about exactly where we were on that big that big move on Monday. So that's not a big follow through that I thought could possibly happen. And that's a key thing, and that's one of the things that we have to figure out today is, that we got 3 more days in the week, and we want to see if this is going to be a reversal week or, in fact, this thing is going to continue higher. So today's action, Monday and Tuesday's action, gives me a pretty good idea of what it's going to be like. Because if it was going to be real bullish, it would have taken off and it would have, really gone great. But the dollar index is still trading right in that same trading range of the 95, I think it's 95.70 today. So it's right in that ballpark of what we're looking at. So we'll see, what was looking at right here. So we're watching it very closely. Okay, now we're taking a look at this dollar index. And this is an interesting one because of that head and shoulders pattern at the 61% retracement and the high that we made last week when that euro made 112.90. That was a spot on 61% retracement in that dollar index too. So that's another one that's very, very interesting. So a lot of things are happening this week, and there's a lot of cycles occurring, and that's why we're keeping a very close eye on them. It's going to be, well, it's hard to believe we're coming into the end of January already. And remember the old market adage, as January goes, so goes the year. And we've had one heck of a January, helped strongly by that bottom that we had on December the 26th in the S&P that was spot on 1.618 ABCD. We'll be right back after these few words.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Wrapping up the show for today. Let's take a quick look at review here where we are. The bonds are trading at 145.07. We're sort of negative to that. We've got the S&P trading at 26.46. Remember, we've been as high as, we almost hit that exact number for Maria. I think we did. 26.49. That's an ABCD. Anyway, that's one of the numbers. And the second number, of course, is up there at 26.57. So you pays your money and you takes your choice to see which one you're going to try. But that's what we're watching at these levels. So keep a sort of a close eye on that. Remember that the gold is very important here. The low that we made here on this little pullback here at 113.05. It's only trading at 113.06, but that's 38% retracement is very important, folks. You know, that's down almost $6 from the low, or from the high that we made, very similar yesterday, had a $7 break. So anything below that level would tell us. Now, silver did not make a new high, so it's still a little bit early. So that's pretty much, what we're looking at as we look at one other. Now, someone asked a question about the sugar. As long as sugar can stay above 1240, that's yesterday's low, it's very bullish. Below 1240, don't want to have anything to do with it. But at 1240 was a great buy, and now it's trading at 1280, I believe, and it should be on its way. In fact, it's a little higher than that. So we'll see if that is going to be moving. I haven't had a chance to go over the hogs and the cattle, but I'm going to have, hopefully, Rich Anderson tomorrow. He's sort of semi-retired, meaning he's only working 13 hours a day instead of 14 hours a day. But we'll try to get Rich on tomorrow. And we do have Tim Bost coming in from Financial Cycles Weekly out of Sarasota, Florida. Will be here on Friday, and he's had some really great, in fact, we should show this today for the folks, because his numbers that he had were really quite accurate. If you look at the forecast that he made the last time he was on, was pretty much spot on. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!